Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Adam bin Faizal and I will be presenting my financial management individual assignment, an analysis of corporate financial performance, a trend and comparative study. The two companies I'll be choosing are IOI Properties Group Berhad and Sunway Berhad. Alright. First off, II Property Group Berhad is one of IOIPG is one of Malaysia's leading public listed property developers. Its principal activities include property development, property investment, leisure and hospitality. IOI Property Group Berhad vision is to be a leading and sustainable Malaysian business corporation with global presence, whereas their mission is to achieve responsible and sustainable commercial success by addressing the interests of all our stakeholders, caring for the community and the environment, and adopting best practices to be globally competitive. Sunway Berhad. Established in 1974, Sunway Berhad is one of Malaysia's largest conglomerates with core interests in real estate, construction, education, healthcare, retail, and hospitality with a unique build on operate business model. Sunway Berhad vision is to be leading diversified REIT. Malaysia is committed to enhancing stakeholder value, sustainable growth, environmental stewardship, and community engagement, whereas their mission is to deliver sustainable income distribution over the long term through responsible business strategy supported by adaptive innovation, solution management, and sustainable practice. Alright. We move on to liquidity ratio. Liquidity ratio function is to measure the firm's capability to pay off its short-term liabilities and expense. It also functions to measure the firm's ability to measure the short-term obligation. Current ratio measure the ability of a firm to pay off its current obligation with current assets. Okay, for II Property Group Berhad, in 2018 it was 2.34, which then increased in 2019 with 2.90, and then in 2020 it is 2.66. Overall, it is a healthy liquidity ratio above one, showing the company is able to pay off its current obligation. Sunway Berhad in 2018 is 1, which then decreased to 0.83 in 2018 and then slightly increased with 0.89 in 2020. Overall, the company current ratio are below 1. This shows that the company have a higher current liability than current assets, which means it will be a problem to pay off its debt next year. Quick ratio. Quick ratio function is to measure the ability of firm to pay off its current obligation with the most liquid assets. The higher the ratio, the better for the firm. II Properties Group Berhad in 2018 is 1.78. In 2019, it increased to 2.14, and in 2020, it decreased to 1.87. Overall, the ratio is more than 1. This shows that IOI Properties Group Berhad are able to pay off its current obligation with the most liquid asset. Sunway Berhad in 2018 it is 0.62, which then decreased to 0.45 in 2019, and in 2020 it decreased to 0.4. Overall, the ratio is less than 1. This shows that Sunway Berhad are not able to pay off its current obligation with the most liquid assets. Activity ratio. Activity ratio shows how effective the firm is using its assets, and inventories indicate how well the firm converts their receivables. A higher ratio is desirable as it indicates greater efficiency. Inventory turnover. Inventory turnover is to measure the efficiency of the firm's inventory. The higher ratio, the better. In 2018 for IOI it is 0.75, which is then decreased to 0.45 in 2019 and then decreased again to 0.41 in 2020. This shows that IOI Property Group Berhad are having a very slow moving assets and are struggling to produce sales from their inventories. Same goes for Sunway Berhad, because in 2018 it is 1.06, in 2019 it is 0.82, and in 2020 it is 0.68. Total asset turnover. Total asset turnover is to indicate how well the firm uses its fixed asset to generate sales. In 2018, IOI Properties Group Berhad is 0.08, which then decreased in 2019 with 0.07 and then decreased again in 2020 with 0.06. The company low ratios indicates that the company is not efficient in managing its total assets and converting it to sales. Same with Sunway Berhad. In 2018, it is 0.25 and in 2019 is 0.22, which then decreased to 0.18 in 2020. All right, we then move on to debt ratio. Debt ratio shows the firm percentage/degree that the firm is using borrowed funds for their operation. Debt ratio, the function of debt ratio is to indicate the amount of debt in the firm's financial structure and measure the amount of percentage of total assets being financed by debt/liabilities. And III Properties Group Berhad in 2018 is 43.53%, which is then decreased to 41.95% in 2019, and in 2020 is 41.79%. This shows that the III Properties Group Berhad has efficiently managed their debt and will survive in the coming future. For Sunway Berhad in 2018 it is 58.75%, in 2019 it is 56.11%, and in 2020 it decreased to 51.05%. Even though there is a decrease, the debt is still above 50%, which Sunway Berhad needs to improve to survive in the coming future. Long-term debt ratio. Long-term debt ratio functions to measure the amount or percentage of total assets being financed by long-term debt/liabilities. In 2018, II Property Group Berhad is 31.49%, in 2019 it is 33.69%, and in 2020 is 33.17%. Overall, the debt level is low and the company will not face any problems to pay off its debt. Same with Sunway Berhad in 2018 with 16.63%, which then decreased to 10.38% in 2019 and then increased to 13.42% in 2020. Next, we move on to profitability ratio. Profitability ratio measures the profitability of the firm at a given level of assets, sales, and equity. Net profit margin. Net profit margin is to measure the profitability with respect to sales generated. II Properties Group Berhad in 2018 has 29.16%, which increased in 2019 with 30.05%, but then decreased to 21.71% in 2020. This shows that overall the company still have a decent ratio and are able to obtain healthy margin from the given level of sales. Whereas Sunway Berhad in 2018 is 13.22%, in 2019 is 16.46%, and it decreased to 10.72% in 2020. This shows that Sunway are less effective in being profitable from the given level of sales. And lastly, return on investment. II Properties Group Berhad in 2018 is 2.38%, whereas in 2019 is 2.02%, and in 2020 it is 1.4%. The low ratio shows the company have reduced their efficiency in obtaining profit from the given level of asset. Same to Sunway Berhad, with in 2018 is 3.28%, and increase in 2019 with 3.66%, and in 2020 is 1.94%. Alright, we then move on to comparative analysis. Liquidity ratio for current ratio. Based on the data, II Properties Group Berhad has a higher current ratio. The difference is 1.77. This shows that the II Properties Group Berhad has the better ability to pay off its current obligation, while Sunway Berhad is facing going concern to survive in the next year. Then we move on to liquidity ratio, quick ratio. Based on the table, II Property Group Berhad quick ratio is higher than Sunway Berhad. The higher the ratio, the greater the ability of a firm to pay off its current obligation. With the most liquid assets, which means II Property Group Berhad has better ability and in a healthier position than Sunway Berhad, which are facing major issues for survival in the next year. Inventory turnover. For activity ratio. Based on the numbers, Sunway Berhad is more efficient in its inventory management because the inventory turnover is higher than II Properties Group Berhad. Activity ratio, total asset turnover. Based on the table, Sami Berhad total asset turnover is higher than II Properties Group Berhad, which means Sami Berhad is more efficient in managing its total assets to generate sales. Debt ratio. Based on the data, II Properties Group Berhad has a lower debt ratio than Sami Berhad. The difference is between these two are 9.26%. This low debt will be beneficial for II Properties Group Berhad because the lower the debt results in lower risk and more desirable by the company's future survival. Long-term debt ratio. Sunway Berhad has a lower long-term debt ratio, which is better than II Properties Group Berhad because a lower debt level means that it will experience less risk in the long term to pay off their debt. And then profitability ratio net profit margin. Based on the table, II Property Group Berhad has a higher net profit margin than Sunway Berhad, which means II Property Groups are able to obtain profit from the given level of sales. Then we move on to return on investment. Sunway Berhad return on investment is higher than II Properties Group Berhad. Sunway Berhad is more effective to generate profit with all its available assets. In conclusion, II Property Group Berhad are significantly better in managing its liquidity and Sunway Berhad are more effective in managing the equity ratio level, while both companies are having relatively similar performance in terms of their debt and profitability ratio. This majorly highlight that Sunway Berhad are facing a major concern in paying off its short-term debt by having higher short-term liabilities compared to its short-term assets, signaling a going concern issue. II Properties Group Berhad, however, are having a very healthy financial position to pay off its debt and having a good survival indicators. In terms of activity ratios, although Sunway Berhad are having a better result converting the assets to sales compared to II Properties Group Berhad, the results generally are below 1, which shows both companies are having slow-moving assets and are struggling to attract customers. Debt ratio-wise, both companies were able to pay off their long-term debts, while in terms of profitability, both companies are managing their expense efficiently by having a healthy net profit margin above 10%, but are both having poor level return of investment being lower than 5%. In a nutshell, both companies are evidently shows property industry are struggling to effectively convert the assets to sales. However, comparing the two companies, II Properties Group Berhad are in healthier financial position for survival in the short term and have a better capacity to further strengthen their business in the long term compared to Sunway Berhad. Recommendation. Based on my observation, II Properties Group Berhad are performing healthily to produce high profitability margins, but may better improve their sales and return on investment by attracting more customers with their inventories at hand. II Property Group Berhad may take an initiative to utilize more efficiently the expense and available assets at hand to attract wider target market with the inventory offering. In terms of Sunway Berhad, they urgently need to focus on their liquidity performance as the survivors are highly at risk with the company may not be able to pay their short-term liability next year. As their long-term debt ratio are at an acceptable level, an option is they may strategize to restructure their short-term loan to set their short-term liability at a more acceptable level that will allow their short-term assets to cover the short-term debts. In addition, Sunway Berhad will also need to revise a strategy to maximize or improve the factors in profitability ratio to at least match II Properties Group Berhad results and factors in activity ratio to help improve the company going concern position. Thank you for listening to my presentation.